Hello. Throughout the campaign and since becoming president, Donald Trump has repeatedly accused China of currency manipulation, regardless of whether the RMB rises or falls. And lately, expectations about interest rate rises by the Federal Reserve have made the US dollar stronger against many other currencies. So, as we await the imminent US Treasury semi-annual foreign exchange report, what's happening with the values of our currency? And what does a stronger dollar mean to global financial markets? And what effect would the continued labeling of China as a currency manipulator have in the ongoing trade war? To discuss these issues and more, I'm very happy to be joined in the Beijing studio by Paul Gillis, Professor of Practice at Peking University, and Professor Jiang Gong of the University of International Business and Economics. We shall also cross over to Robert Kapp, who's standing by in Hong Kong, and he's the director of the Economist Corporate Network in Hong Kong. That's our topic. This is Dialogue. I'm Yang Rui. Welcome to Dialogue. What's the likelihood for China to be designated as a currency manipulator, John? Paul, sorry.
I think it's very likely that President Trump will label China as a currency manipulator, even though I don't think China actually meets the requirements to be designated as such.
I think there's zero.
You're John, right? He's Paul.
I beg to disagree. I think there's a piece of legislation in the U.S. that says they have 3 criteria that you have to meet. China only met 1. China's current account balance the trade surplus with the U.S. is very sizable. Other than that, it doesn't meet the other 2 criteria. And I think from what the Secretary Mnuchin has said, I got a sense that he's not going to label China as a currency manipulator.
What are the criteria a country has to live up before they could be designated as a currency manipulator?
Well, under this 2015 law, there are 3 criteria. One, you have to have a big current account surplus, which China has. You have to have a trade deficit that exceeds 3% of the GDP. China doesn't have that. Right. And you have to intervene in the currency markets in one direction in an amount more than 2% of your GDP. And China has not done that. In fact, all China has really done in recent times is intervene on behalf of actually trying to keep the value of the RMB up, as opposed to letting it slide further down.
Then what's behind the accusation of the Trump administration that China could be a currency manipulator?
I think it's just propaganda. I mean, this is something...
Propaganda or politics?
It's a propaganda campaign to gain more bargaining chips in the upcoming negotiation, I think. It's essentially an accusation. It's a trumped-up accusation to look as if the United States sits on the high ground. And we know that this had happened before. I think several years ago, China was again, was labeled as a currency manipulator. But at the time, the Secretary of Treasury at the time didn't officially put this in.
You remind me of what happened a few years ago when
right.
Senator John McCain came over along with other lawmakers accusing China of manipulating the currency, but they were proved wrong later on.
Right. So today's situation is even less relevant than last time. So I think, relevant to the 3 criteria you referred to. So I think, Secretary Mnuchin isn't likely to just, write this into his report and make this blind acquisition. That's my opinion.
I think he will resist doing that, but I think the pressure of the election coming up in just a few weeks is likely to change that. There is a 30-year-old law that they can still use that focuses only on the trade deficit. And under that, they could go ahead and label China a currency manipulator. However, it would basically be flying in the face of the 2015 law.
Yes, we did enjoy huge trade surplus at this defining moment, but that's because manufacturing enterprises need to build up their...
so Christmas season is coming, and U.S.
not only seasonal factors, but they need to get the business done ahead of the rise in tariffs.
That's another perspective. Absolutely. I think other than the U.S. economy is doing very well, the Christmas season is coming. I think you're right. There's another perspective that some exporters are trying to beat the deadline before these tariffs are imposed. Now I'm a little bit skeptical about this midterm election theory because the American people really don't care about China. They don't even understand this currency manipulation issue. Okay, and I think think to what extent the China issue plays into the midterm election it's very much doubtful. Now, I'm sorry, Paul. I'm a little bit skeptical about this.
But here is a slide in exchange value against US dollar in many other developing countries. It's not just targeting China. And this semi-annual foreign exchange report doesn't just single out China. I mean, it's meant to be an annual practice. A policy practice by whatever administration, right, Paul?
Yes, they tend to focus on certain larger countries. If you actually applied this more broadly, you would find that Thailand and Vietnam actually hit all three markers that
Switzerland
that are in there.
also,
Switzerland hits
and
it,
also
right.
Taiwan is also, I think.
And Taiwan would hit that, but the focus is on China, and that's because Trump has made promises to his supporters that he's going to go after China. And so that's why I think he'll keep China in his sights.
Well, I wonder if our guest speaker, Robert Cab, is ready in Hong Kong. But let me ask you, there has been a new rise in the Chinese surplus in trade with the U.S. in September. And how is that related to the lower RMB? What are the main reasons behind the surplus? You may have answered partly this question, but do you think there is a deliberate attempt by the Chinese monetary authorities to devaluate the RMB, and we could use this devaluation as a hedge against the side effects that we suffer from the trade standoff?
Well, as John mentioned, I think some of the surge that we saw in September is attributed to those who shipped trying to get ahead of the tariffs that were coming in. But a weaker renminbi makes imports into the United States cheaper. And that would allow a Chinese manufacturer to drop prices, yet still get the same amount of renminbi. So that allows them to offset the impact of the tariffs. And so there's suspicion in the United States that China might want to drop its currency value in order to take advantage of be able to sell at lower prices, yet still get the same amount of profit to their Chinese manufacturers.
But clearly the Chinese authorities are aware of the watchful eyes of Washington when both economies are involved in a trade standoff. Let me cross over to Robert Cab for his analysis about yet another major issue or policy preference that may have affected our exports to the United States, such as the trade surplus. What do you think of the issue of a tax rebate, which has been used by the Chinese government to encourage exports?
Well, that's a big part of the overall, analysis that the Trump administration uses. They're looking at, as we've been discussing tonight, currency on the one hand, tax rebates. Any sort of state support, as it's called, is very much in their mind. So they look at things like the currency and they say, the PBOC intervenes, the People's Bank of China intervenes in ways that aren't true of a market economy, and they kind of run a list of all the issues they have. What you're talking about, the tax rebate, is another one that they just add to kind of their arsenal of reasons to accuse China of trading unfairly.
I want to jump in a note with respect to the tax rebate. The tax rebate is really the tax rebate of the value-added tax, and it's actually a standard practice in a lot of countries where they have value-added tax. If we travel to Europe, for example, we can file a tax return at airports for things we bought at airport, and this is nothing different. And I think especially in the U.S., because in the U.S. they don't have a value-added tax system, and usually from a trade perspective, from a trade theory perspective, value-added tax is supposed to be neutral. In trading transactions. It's not supposed to affect the flow of trade. So I think the idea of that the trade tax rebate is going to have a huge impact on exports. I'm a little bit skeptical as well.
I believe you guys must follow the recent remarks by Mr. Yi Gang, top banker of China, and he said at the conference of G30 that there are many tools in China's monetary box, and the rise or lowering the required reserve ratio could be one of the options on the table. Now, Robert, I wonder if you could help us read into the policy remarks by Yi Gang, and he said to have delivered a very solid message about how to stabilize the confidence of not only the economy in China, but the consumers, investors, and all others who follow the escalation of the trade disputes between the United States and China. What can you tell us, Robert?
Well, there are indeed lots of tools. I guess it's a question of efficacy. Let me also just quickly say what John Gong was just saying is correct about the value-added tax. But my point was just that the Trump administration seems to look at anything the Chinese government does and kind of stack it, against it as an argument. But in terms of what Yi Gang has mentioned recently at the meetings in Bali, refer to the fact that China, I mean, I would put it this way. China is fairly unique for operating under a closed currency account. That's not necessarily good or bad, but that is how it operates. It's not a freely traded currency. And that means, in addition to things like what you were talking about there, Young Ray, the reserve ratio that's required of banks to keep money safe and sound in their vaults, and just basically pump in liquidity. That's when they can still lower interest rates, for example. They haven't really gone too far with that yet. There are many, many tools you can do that don't require the same considerations you do when your currency is exposed. So, yeah, he's right. And will that shore up confidence? It can. In the near term, it certainly helps, but I do have some concerns about the long-term effects.
I need to have your analysis about yet another major point that Mr. Yi Gang came up in Bali. That's in the broad picture about the trade disputes between the United States and China, the reform of the SOE, or the role SOE plays in shaping the prospects of the Chinese economy, matter a lot to observers. Now, he says the Chinese authorities would stick to the principle of competitive neutrality regarding the future of SOE or state-owned enterprises. So what does that mean for example, the issue of non-market status in the latest agreement between Canada, the United States, and Mexico regarding the so-called non-market status? Yeah. What do you think of the impact of the message that Yi Gang delivers about the future of our SOE in our country?
Well, certainly I think most foreign investors hope that what he says will be the case. The impression, I would, though, argue is that they don't feel state-owned enterprises necessarily compete equally. Now, I should point out many state-owned enterprises have joint ventures with foreign firms, and there are many foreign interests that feel working with state-owned enterprises isn't necessarily an issue. But I think to your point about what this means for the trade agreements, as long as you have state-owned enterprises, that seems to be an issue not only with the Trump administration, but to a large degree even the EU and other countries where they see this as, again, a form of state support. So I think as much as the Chinese government might try to make these industries competitive, I believe that is part of supply-side structural reform, at least part of its goals. Nevertheless, there's going to be arguments from its trading partners that that gives an inherently unfair advantage to Chinese state-owned enterprises. Yeah, I mean, the fact that they exist as state-owned is my point.
The Yi Gang report, the Yi Gang remarks.
Yeah, well, the competitive neutrality is a narrower concept, in my opinion, pertaining only to the SOE's operation. Essentially says it should provide a level playing field for competition between SOE and private companies. It has a list of things. I mean, this thing actually originated from the Helmer report from Australia. It was widely promoted by OECD for many years. And I think this is a very significant development. It's the first time that China's officially announced that it's willing to stick to the competitive neutrality principle. I mean, this principle has been essentially embedded in the TPP agreement, Chapter 17, which is back to SOEs. And China hasn't really said anything about that. But today, I mean, just a few days ago, it came out to officially say that we're willing to use that principle. It has broad coverages about, for example, tax neutrality, regulatory neutrality, research R&D, subsidy neutrality. I mean, all these things, 7 or 8 categories of neutralities that the government needs to take measures about to ensure that private companies and SOEs should be competing on a level playing field. Now, the concept of market economy is a much broader in a much broader context. It talks about the overall economy. The United States, for example, has a trade law that has a list of, I think, 7-point analysis that to go through by the Department of Commerce to test whether China meets that criteria. It's essentially a different concept. I think even China meets the competitive neutrality, which I think is an easier task to achieve. The United States still wouldn't be considering China as a market economy based on this 7-point analysis they're going to go through by the Department of Commerce.
I think that's right.
Paul, do you think whatever China does will not help mitigate the hostile attitude of the Trump administration?
Well, I don't think that, I think these are interesting and valid arguments, but I don't think that 1% of Americans understand them or care about them.
Yeah.
What is the issue here is that Trump has tapped into resentment by many in the United States that the 21st century is leaving them behind. And they're blaming China for it. And what they're hoping is that Trump will sign some formula that has all of these companies that have come to China return to the United States and start manufacturing there and paying $50 an hour in wages. It's not going to happen.
Let me go back to Robert. Hi, Robert. The RMB has fallen by 6% against the US dollar, I believe 0.6% against US dollar this year. The US said they are very concerned about Chinese yuan's recent drop. What are the main reasons for the weakening of the yuan, and how will that affect the economy and trade war at home? I mean, how will that affect the economy and trade at home and abroad?
Well, I think just as Paul and John there were talking about, you have a depreciated currency, it offsets the tariffs. Actually, if you measure the drop since about March of this year, it's been closer to 10%. So that, if you have a 10% tariff and a 10% drop in the currency value, that means you've neutralized the effect of the tariff. So one of the profound ironies of the trade conflict between the U.S. and China is that it does put downward pressure on the renminbi, because the assumption is this will hurt Chinese exporters, it softens the Chinese economy, and it creates all sorts of issues that you would, under normal market conditions, consider contributing to a weakening of a currency. So, I mean, that's basically it, that you have an unfavorable business environment because of the trade war that is bringing down the currency, and that could, in fact, neutralize the tariffs. Now, what the Trump administration has been talking about, as of the beginning of next year, the tariffs will go up from the latest round that was announced of some $200 billion, adding in total about 250 of all items to be tariffed. It'll go up to 25%. So, that could make both the depreciation worse, but also make it kick more, because the depreciation so far hasn't been at that level.
Perhaps we have focused too much attention on the issue of RMB, depreciation. What about the issue of US dollar getting stronger and stronger, Robert? Well,
no, undeniably, that's the other component to consider in all of this. It's not just a weakening of the renminbi. You've got the Fed hiking interest rates. It's done it, I think, at last count 3 times this year. Another rate hike is expected within this year. We at the Economist Intelligence Unit are predicting 3 for next year. That's consistent with the new Fed stewardship that's looking to create a neutral level for the rate after years of quantitative easing. A neutral rate would imply something on the order of a 3 to 4% interest rate. So it's going up, and when it goes up and you have strong economic performance like we've seen in the U.S., the currency is going to go up. So you've got on the one side lots of factors creating a downward pressure on the renminbi and upward pressure on the U.S. dollar. That's a matter of reality right now.
Paul, why do you think the U.S. dollar is getting stronger?
I think the major factor is the increasing U.S. interest rates. When interest rates in the U.S. go up, it encourages people to move money into U.S. dollars, to buy U.S. dollars and take advantage of those higher interest rates. As long as U.S. interest rates continue to climb, I think the dollar is likely to continue to climb.
What does U.S. dollars going back to the United States mean for emerging markets?
Well, the biggest concern, I think, in emerging markets are companies that have issued debt in U.S. dollars. And many companies have. And what happens when that happens is the debt is becoming more valuable in their local currency. And some companies may have trouble actually meeting their debt requirements for interest and principal payments on that debt because their earnings are in local currency that have now depreciated in value, and the debt remains in U.S. dollars.
I may want to add another reason for dollars getting stronger. Until a few days ago, the U.S. equity market has been performing spectacularly. It's been a very good place to investment. And also as a result of Donald Trump's tax reduction plan, there are oodles of money outside of U.S. held by corporate America going back to the U.S. So there's actually a lot of demand for U.S. dollar. So that's actually driving this. Now, I also want to add another reason for Chinese yuan's depreciation. As we all know, China's economy has been doing very well since June or July this year, and market expectation has been very weak with respect to RMB's future. So I think secretly, a lot of people actually are exchanging for dollars and trying to sort of, getting their assets outside of China. And I think it's very clear from the statistics on the current account balance, we're actually seeing a rapid drop of our foreign exchange reserve. I can't remember the exact number, but it's a noticeable, remarkable drop last month. So I think our foreign exchange was just barely above $3 trillion right now. So all these reasons combined contribute to the weakening of the RMB. If any government intervention, it's actually the government's last-minute intervention to pop up RMB. It's the exact opposite of currency manipulation. If this is actually any theory about China's manipulation at all.
With regard to a strong U.S. dollar, now, Robert, do you think the Chinese government is likely to continue to raise our forex reserves in U.S. dollars, given the high risk reliance on this major reserve currency throughout the world, and it's also used for global payment? Now, I said this in the context of, for example, European complaints, Russian complaints, Iranian complaints, and even Arabs complain that their pegging to the US dollar may have aroused a lot of concerns about the volatility of the financial markets. Now, every 10 years, it seems we're going to have a curse in the cyclical nature. So every 10 years, so what do you think of the risks we are facing?
Right, so the curse of eight. We're at the 2018 following the 2008, 1998, 1988, so forth, crises. Well, numerology aside, we are at a very interesting juncture. Now, to your specific question there about the reserve currency, I can't really give a forecast on where the Chinese central bank's reserve currency holdings of dollars are going to be headed, but I expect they might, just as John was mentioning there, have to spend more in order to prop up the renminbi. So, I mean, in terms of acquiring more, I can't speculate. But I think that the bigger issue in all of this is it goes beyond actually currencies itself and what the central banks are holding. It's more along the lines, actually, a couple of points that have come up in recent conversation, things like stock markets, things like interest rates. These are fundamentally moving the value of currencies. And of course, another component that's beyond both the control of the U.S. and China is just emerging market weakness. They're going through lots of different issues. Part of them relates to what Paul talked about when they're issuing debt in dollars and their local currency is going down. That increases their debt burden. That's actually how we got the Asia financial crisis of 1998, by the way. So there's a danger of that repeating, although if you look at the external debt levels of most emerging markets, they're not like they were 20 years ago, so we're probably safe for that. But I'd say the main thing investors and governments should be looking at are a whole host of factors. There isn't, I can think of one singular issue, whether it's reserve currency or interest rates on its own, but in combination, trade war, all these issues combined are creating a lot of destabilizing factors.
When we look at the strength of RMB, excuse me, what do you think of our attempt to further diversify the spectrum of reserve currencies in the basket of special drawing rights? Is it likely that we'll internationalize RMB in the foreseeable future, despite the brutal fact that we haven't further opened up the capital account, neither could we freely convert the RMB?
I think it's very difficult for the RMB to become internationalized until you have free convertibility. And free convertibility just cannot happen in this kind of environment because China runs the risk of capital flight. If there's a fear that the yuan will devalue, then the currency will leave. People will convert it into dollars or other what they perceive as safe currencies, and they'll make their fears come true.
Paul says that this is basically a suicide process.
I think it's our government's position that it's eventually that's the direction, that's the goal. And I think that we are incrementally moving towards the direction by making little things right now. We're sort of laying the groundwork for eventually making the RMB totally convertible. For example, we're actually using RMB as a settlement currency for a lot of transactions for international trade. For example, we have this deal with Russia for the oil and gas trade. We're using the foreign RMB as a settlement currency. I think some kind of agreement as well with New Zealand and a couple of other countries. That's one thing. Second is I think we are using RMB, we're actually issuing a debt in foreign markets denominated in RMB. For example, in Hong Kong, we have the bond market denominated RMB. Some foreign countries indeed hold RMB as part of their foreign exchange reserve. Malaysia, for a fact, I know, has been doing this, and some other countries are doing this. So I think incrementally, Chinese RMB is moving towards that direction. It's
after all a third major reserve currency following the US dollars and the euro. Back to Robert, Mr. Yigang says that the internationalization of RMB, quote unquote, has to be subject to the supply and demand in the market. What does he mean?
Yeah. Well, it relates to some of the points that were just being made there by John. You start with settlement currency, that's part of market flows, but to go to reserve currency, and to your point, Young Ray, to get it to the level of, say, the third largest reserve currency in the world, that's a huge leap. I mean, so the market part, to Yigang's points, you have to have convertibility. People have to feel there's liquidity in the currency, and they also have to believe in its long-term store of value. And that takes a lot of confidence building, and it takes a very open market system. And indeed, maybe China is headed that way, but so far it's a long ways away. And it has to do quite a lot even to compete with the pound and yen to make that very high point of power as a reserve currency and to be truly kind of a global influencer. It's getting there. It has potential, but it's got a long way to go.
Now, gentlemen, let's look at the broad picture about the Chinese consumers, investors, and so on and so forth, policymakers included. Now, there is a strong mixed feeling, to be honest, here in mainland China about the trade war, with some of the liberal voices saying, hey, it may not necessarily be a bad thing for the Chinese to consider seriously how to deepen the reform on the occasion of commemorating the 40th anniversary of China's opening up. President Xi Jinping is expected to deliver a keynote, if not a landmark policy speech in commemoration of the 40th anniversary of China's opening up. Now, before we conclude this meaningful discussion about the prospects of RMB, what do you think of the benefits of opening up our financial markets, our insurance industry, and the service industry altogether as a package to not necessarily be viewed as yielding to the demand from the US market in the trade war?
I think China should try to remove every restriction on foreign investment that is not a matter of national security.
U.S. position is pretty clear.
I sort of agree, actually. I think China, being the world's largest trading nation, cannot afford to have a closed financial market, because financial market, after all, is sort of associated with the commodity market, associated with the trade market. So I think it's inevitable we have to move towards that direction. We just have to do this in a phased approach, not in a sort of a overnight transition.
Short term, Robert, what do you think of the measures to be rolled out by the Chinese authorities to sort of mitigate the impact of the trade war?
Well, I think doing things like opening up the financial markets more, encouraging more foreign direct investment, those would be the main recommendations I would have.
Thank you so much. I'll see you next time. Goodbye.